Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the confusing world of business filings. Today we're diving into EQT Infrastructure Co LLC's latest report. So typically on this channel we might be looking at big quarterly or annual reports, but this one is a bit different. It is what is called a Form 8K, which is usually for significant events that happen between those regular reports. And the event here is a big one. On the 1st of February 2026, EQT Infrastructure Co LLC made a big move. They sold quite a bit of stock, not on a public exchange, but directly to private investors. This is a common way for companies to raise money quickly without going through the whole public offering process, which can be long and expensive. This section tells us exactly what happened. The company sold shares of itself to third-party investors for cash, and it was a substantial amount of money. Let's look at the numbers. They sold a total of over 7.1 million shares. These shares were split into two types, Class A, I, and Class A's. And for these shares, they brought in nearly $179 million in cash. That is a serious injection of capital. The price per share was $25. It is interesting to see how the company is divvying up these shares between different classes and the amounts raised from each. But that is not all. They also issued nearly 395,000 Class E shares, but this wasn't for cash. Instead, they received ownership interests in a company called Juni's Energy GmbH. This company is involved in battery energy storage systems, which is a pretty hot and important sector right now as the world shifts towards renewable energy. So they are essentially trading equity for assets that align with a greener future. Now, importantly, these sales were exempt from the usual registration requirements under securities laws. This usually means they were sold to what are called accredited investors, who are considered sophisticated enough to understand the risks, or to investors outside the United States. This is a standard way for companies to raise private capital without the red tape of a public offering. So what does this all mean? EQT Infrastructure is clearly actively managing its capital structure. They are bringing in significant cash to presumably fuel growth, develop new projects, or perhaps pay down debt. The specific involvement with GU. Nice Energy shows a strategic interest in the renewable energy storage space, which is a smart move given global trends. Looking at the numbers, the nearly $179 million raised from private investors is substantial. This provides EQT with a lot of financial flexibility. The simultaneous acquisition of ownership interests in a battery storage company signals a clear direction and focus on future energy solutions. One of the potential risks here is that these private sales, while quicker, might not always achieve the best valuation compared to a public offering. However, for a company like EQT Infrastructure, which likely engages in large complex projects, speed and flexibility in capital raising can be crucial. Overall, this filing shows a company that is not afraid to make bold moves to secure funding and strategically invest in promising sectors like renewable energy storage. They are actively shaping their future, and this capital raise is a significant step. Alright. That is our breakdown of EQT Infrastructure Co LLC's recent filing. What is your take on these private funding rounds and their strategic investment in battery storage? Drop your thoughts in the comments below. If you found this explanation helpful and want more decoded corporate insights, hit that like button and subscribe to the channel. And don't forget to join our Discord community. The link is in the description for more in-depth discussions. Thanks for watching, and we'll see you in the next one.